Gold prices have been moving higher, and a lot of people are wondering where things go from here. No one can say with certainty where gold will trade next week or even next month. Short-term price movements are always unpredictable. But when we look beyond daily charts and focus on the bigger picture, the forces that have been pushing gold higher over the past several years are still very much in place. Gold has never really been about quick trades or short-term predictions. It has always been about long-term protection. Investors turn to gold when they start to question the stability of the financial system, government policy, and the value of paper money. And right now, those questions are becoming more common. One of the most important factors supporting gold is government spending. Around the world, and especially in the United States, governments continue to spend far more than they collect. Trillions of dollars have been added to national debt through stimulus programs, military spending, infrastructure projects, and social programs. When governments rely heavily on borrowing, confidence in fiat currency can weaken over time. Gold benefits in this kind of environment because it cannot be printed, it cannot be diluted, and it does not depend on any government's promise. Another major reason gold has remained strong is growing global uncertainty. Over the past few years, the world has become a less predictable place. One of the biggest wake-up calls came when Russia invaded Ukraine and was cut off from parts of the global financial system, including the SWIFT payment network. That moment changed how many countries think about financial security. It showed that access to global payment systems and foreign currency reserves can be restricted during times of conflict. As a result, many countries began to rethink how they store their national wealth. Gold, which exists outside digital systems and political control, suddenly became much more attractive. It doesn't rely on computers, software, or international approval. It is a physical asset that countries can hold directly at the same time. Central banks around the world have been increasing their gold purchases. China, in particular, has been reducing its holdings of U.S. Treasury bonds while steadily adding to its gold reserves. And China is not alone. Other countries are also looking to diversify their reserves, partly because of concerns about rising debt levels and geopolitical risk. Even now, gold still represents a relatively small portion of many countries' total reserves. That suggests there is room for continued buying, especially if global tensions remain high and economic uncertainty continues. When central banks buy gold, they do so in large amounts and usually hold it for the long term, which provides strong underlying support for prices. Not long ago, many people believed gold was finished as an investment. The popular view was that cryptocurrencies had replaced gold as the ultimate alternative to traditional money. Younger investors were told that gold was outdated and that digital assets were the future. But over time, perceptions have started to shift. Cryptocurrencies introduced a new generation to the idea that fiat currency carries risk. But they also revealed new risks of their own, including extreme volatility, regulatory uncertainty, and security concerns. Interestingly, this has led some investors back to gold. Many now see gold as the most reliable hedge against currency risk because it is highly liquid, widely accepted, and free from technological vulnerabilities. Gold doesn't depend on algorithms, electricity, or internet access. It has a long history of preserving value through economic and political change in many ways. Gold is showing its true role once again. It is not about speculation or hype. It is about stability. In a world facing rising debt, persistent inflation concerns, geopolitical tensions, and shifting global alliances, gold continues to play an important role in the financial system. This does not mean gold prices will rise in a straight line. There will be periods of volatility, pullbacks, and corrections. That is normal. But the long-term drivers behind gold demand remain intact. Government spending remains high, global uncertainty continues, and central banks are still diversifying away from traditional assets. When investors step back and look at the broader economic landscape, many conclude that the reasons for owning gold have not disappeared. In fact, in some cases, those reasons have become stronger. Gold's role is not about predicting the future. It is about preparing for uncertainty. And in today's world, uncertainty is something markets continue to face. If you want clear, easy to understand updates on the U.S. economy, financial markets, and global events that shape economic outcomes, you're in the right place. This is Economic News USA. Like the video, share it with others. And subscribe to Economic News USA for more reliable economic news explained simply.